Association. My name is Kat Dunn. I am the WA chapter lead for this. We'll go into a bit more detail about what this is all about and some background, but firstly, before we kick off, I would like to acknowledge the Whadjuk people of the Noongar Nation on whose lands we're having this meeting, and to acknowledge their relationship with the land and the waters, and acknowledge their ancestors past and present. So, before we start, who is a member of the Oz DeFi Association on Discord? Yeah, a few of us? Awesome. So the rest of you, you're welcome to grab your phones and add us on this QR code. So who are we? This is the agenda. I'll talk about the UWA team in a moment. But essentially, we are a non-profit peer-to-peer education platform. We started out in Sydney and we are now in 10 cities around the country, including Perth. Australian DeFi Association is a bit of a misnomer because we're not just DeFi, we're also Web3, blockchain, NFTs. This is sort of a catch-all phrase. We're bigger than just decentralized finance, but today certainly the focus will be on DeFi. Just taking you back, for those of you who, there's a few here that I've seen at the last few meetups, but who's the first timer? Hands up. Awesome. Okay, cool. So I'll give you the origin story in a nutshell. So in 21, a group of us in Sydney were really passionate about DeFi, blockchain, and the possibilities of Web3, and we started having these discussions on WhatsApp, and that got quite unruly. We started a Discord, and eventually that became the Australian DeFi Association. Some of you who were here at the July meeting might have met our co-founder, Mark Montford, who flew over from Sydney to share a bit about what's going on nationally. It started off as a really modest group of about 20 people and has now grown to about 2,000 nationally, including in the Northern Territory. We've got a range of people actually from, there's young people and hardcore DJs who've been in this space since 2008-9. And then we have like a 70-year-old grandmother called Esmeralda up in Darwin who comes online from time to time as well. So I think the point of that is that it's an inclusive organisation and community where we noticed that there wasn't a lot of material out there and peer communication around how to learn about blockchain and DeFi, especially as it's starting to get momentum. And we thought that the best way to do that would be through collaboration and through community. So we set up the Oz DeFi Association. I'll give you a bit of background as to why I'm standing here. So I'm Kat. I was part of the co-founding crew over in Sydney. I'm originally from Western Australia, originally from Geraldton. Moved over to Sydney and started a career in TradFi, so corporate law, M&A, private equity, VC. Eventually managed funds and then eventually social finance, microfinance in particular, and humanitarian work, and have moved into impact investing, and particularly why I'm interested in Web3 is the impact that it can have on the ground to unlock non-traditional capital to projects that may not otherwise be able to access the money that they need to create good in the world. I'll actually call out one of our colleagues, Phil Lewis from Empower, who spoke at the July event. Some of the cool things that they're doing with NFTs include, enabling people to become impact investors to solve the problem of affordable housing in somewhere like Mozambique, where you're able to buy an NFT that creates a house that's able to, instead of giving a mortgage to a family, that funds a rent-to-own instrument, and the rent gets securitized, which means that a family can move into a home and do that in an affordable way, but then the impact investor is able to get a 9% yield from the securitized rent. So that's the kind of power that I think DeFi and NFTs has. When I moved back to Perth last July, our merry band was about 5 people at the petition at a bar. And eventually we grew to, the July event had about 60 people there, which was really cool. So it's an organic growth and reminds me a lot of how we grew in Sydney and then in Melbourne and Newcastle, Brisbane, Adelaide, Perth, Canberra, and Darwin. So what do we do at the Oz DeFi Association? We have meetups. We do quite a lot of work on the media. We're on AusBiz and we talk a lot about crypto and macro trends there. We also have a newsletter and we do a lot of educational publications. So if you would like to be part of that community, please sign up to the Discord. Some updates from Perth. So we actually have Ronan here from H-Bar Suite. They are joining Space Cube and Bamboo as an event sponsor for our regular meetup. So thank you very much, Ronan. And I want to call out Blake and Tracy for your ongoing support at Bamboo, and also the guys at Space Cube that give us this really beautiful space, and also Lauren and all the other volunteer helpers that we have to make this community possible. Other updates. I know that a few of you have been to Singapore recently, and in particular Token 2049, so it might be worthwhile updating the community on what happened there. Trace, if you wouldn't mind. Yeah, come on.
Did anyone else go along to Singapore's Token 2049? Well, it was a fun time. So it's Asia. Has anyone been in the past at all or know much about it? So it's Asia's biggest kind of Web3 innovation conference. It was over 2 days a couple of weeks ago. 10,000 people came along, and it was incredibly run considering it was 10,000 people over 2 days, and it was awesome. I've got to say, it was a really fantastic event. It was, anyone you can think of was there. No, it wasn't really retail focused, it was more B2B. Incredibly well run. You would not think that we were in the middle or towards the end of a bear market, because it just, towards the end, it just screamed money, to be honest. OKX was the headline sponsor, but it was a really great event. There was phenomenal speakers there. I think the biggest takeaways were talks around Web3 and gaming. There was a lot of talk around stable coins and layer 2s. I think what was our favourite talks, Blake? The layer 2 talks? Yeah, there was some really interesting talks on layer 2. I think dominating though was probably the Web3 talks. There was 2 main stages where those talks were set up, and then there was a lot of different booths. To be fair, there was probably a lot of rubbish there at the same time, to be honest. A lot of really new businesses also. But there was people from all over the world there. There was a huge Aussie contingent. We started up a WhatsApp chat. I think may have been started by both the Oz DeFi crew, and Mark's always involved in something, and the guys from Upside Down. They started with 12 in the chat, and they ended up at 175 Aussies. Yeah, 175 Aussies. You had to just quieten the chat down because it was pinging the whole time. So yeah, there was a really big Aussie contingent that was over there, which was really good to see. So everyone was kind of catching up and chatting, but you know, everyone was willing to chat. Everyone was willing to talk with each other about what was happening. There was a lot of deals going on, but it was a really positive event. Everyone was talking like we were, you know, nearing the end of what's been a pretty brutal crypto winter, but everyone was super positive. It was a different flavour over in Asia. There wasn't so much talk about regulation like we here in Australia and maybe the US. It actually wasn't really spoken about at all. It was just kind of getting on with it there. So all in all, it was a really positive event. Lots of Aussies over there, and if you can get across to it, then I think it's definitely worth doing it. The next one is earmarked for Dubai in April. So yeah, there you go.
And I think there is another big event coming up soon. It's the Oz Crypto Conference. When's that, Lauren?
November.
Yeah?
11 and 12.
Okay, sweet. You guys are all over it. So the Oz Crypto Conference is on the 11th and 12th of November, and there's also going to be a few DeFi things happening around Best Tech Fest. So stay tuned for that. I know that I've been up here talking quite a lot. That's not how it's going to work. What we try to do with these events is kind of mix it up a bit in terms of format. So July was showcasing a range of different projects, from Impact to a creative NFT project, Art6. So Beth Templey and Cav Templey, whom some of you might know, Cav is the lead singer of Eskimo Joe. They've started a project called Art6 where they're bringing together multimodal artists, so musicians and visual artists, to come together and I guess essentially a creative jam in a contained period of time to create dynamic digital art, but that is human-centered, and I guess that's at the antithesis of what we're seeing in terms of generative and creative AI happening at the moment. They're exhibiting very soon. They exhibited a few weeks ago in Fremantle, so stay tuned for their project. Last meetup was August. We had a collab between F Off, which is another project of mine. It stands for saying F off to the fear of failure. It's the Fear of Failure Forum. We had James from Simpler, Blake from Bamboo, and Ronan from HBAR Suite, who were kind enough to share not just the highs, but the lows of being a builder in the DeFi space, which I think is really important. We are in a bear market, and I think there's a little bit of inauthenticity and not a lot of credibility if you're not also talking about the hard times and why it's not working, because I think we need to learn from that. Yes, you can, point to external factors and market forces that are beyond your control, but there's also some things that we can learn, and many of us are still in the process of learning, and if we can learn from each other, hopefully that can save some heartache down the track. And today I'm really excited that we're doing a collaboration with the UWA Blockchain and Cryptocurrency Research Centre, and I'm joined here by Dr. Dirk Baur, who heads that up with some of his colleagues. And we haven't really done this before. We're playing with the format. It's the intention is an industry and academia dialogue. I think what's really important is to have multidisciplinary actors talking with each other in order to be able to get, surface the best ideas and ensure that things that are worth creating are created with the right people, and also that claims that are being made in our space are validated by research. So Dirk and his team will share a bit about that in a moment. And then next month, October, actually 2 weeks, we have Magnet Capital coming over from Sydney. They are a bit like a digital X, but they exclusively do digital asset management. They're going to be talking about learnings from a crypto asset manager. So going into the macro trends that inform their investment thesis and their portfolio. They'll talk a bit about the regulatory implications that are coming down the pipeline. They're also going to talk about how they make decisions, deep dive into some of their portfolio companies, and also talk about some of the ones that didn't work and why. So I think that's going to be a really cool event to come to. That's Thursday, the 12th of October, 2 weeks, and I can put it up at the end so you guys can sign up here when we close up. But that's enough from me. I'm kind of on time. Dirk, I'd love to invite you up here. So I met Dirk through Nick Bishop of Not Centralized, which is the for-profit spin-off of DeFi Association. Dirk, I'll let you do your bio, but it's very distinguished. Ladies and gentlemen, can we give Dirk a hand? And the intention here is it's interactive, ask questions. I'm sure it's going to be really entertaining, but I'm over to you.
Thank you. Thanks for the invite, and thanks for the opportunity to talk to you. And I hope that you find this interesting and you learn something. We don't have a clicker, so to go down and do this. Myself, I joined UWA in 2016, and we have been doing research in that space since 2014. So for quite some time, and so have many of my colleagues who are here. So what does this center do? What do? We do research since 2014. We organize an annual global conference since 2018 with keynote speakers from top universities, ourselves, but also Princeton, MIT, and the RBI. And we do public seminars. Next week, for example, we have Iris Energy, that Bitcoin mining company that will, it's online, and you can find it on the website. And they talk about mining and the issues also with the clean energy mining. We have several PhD students, I think 3 or 4 are here. One works on stablecoins, Nico here. Blockchain patents is Yulin. And we also have one who works on narratives, I think he's not here. And my other colleagues will explicitly talk about their research in a couple of minutes. And we also do town meet Scout events, where we had one last year, and we'll have another one this year or early next year, where we try to educate people or try to share our knowledge and also debunk some claims and potentially reduce polarization, because there's a lot of polarization in this space. And of course, in general, there's a strong interest in decentralization versus centralization. We would like to do more research based on what industry wants or needs, or startups, and that's also why it's a great opportunity to be here to learn from you what you need, what you think we could do in addition to what we're doing anyway. Clearly, our focus is finance, because we are all from a finance department. And I also, kind of the climax of my presentation is a project that I have with David Barros, who's sitting there. a publishing platform which highlights some funny issues in the academic publishing world. I mean, funny or crazy. So this is one of the papers or research that we've done. I'm a blockchain too. How does the market respond to companies' interest in blockchain? The main finding, blockchain announcements increase market value of listed companies more so if Bitcoin is going up. So that was in the 2017-2018 period, that hype, where some companies just made, well, some just made or some really made them intentionally and did something with blockchain, but it was just, they made blockchain related announcements where the focus was on blockchain, and that helped to boost their share price and market valuation, even if there wasn't too much additional information provided. Another research, more recent, is Loaded for Bear. I'm very proud of that title actually. Bitcoin private wallets, exchange reserves and prices. And so here the main thing is investors prefer holding Bitcoin off exchanges and private wallets. You're maybe not surprised that you don't want your wealth exposed on an exchange like FTX. And they use the exchanges primarily to trade. That's also not surprising. But what we found and what we can use them to make money is that when exchange wallets are loaded, so if people start to transfer their Bitcoin from their private wallets to the exchanges, that means that they load for bear markets, right? Because then they want to sell. And if you see that, you can then front run those events essentially. Good, and then another thing which is really related to this claim that Bitcoin is so bad for the climate and the worst thing that we've ever created or people have ever created. And so we looked at this like a financial perspective and found that the absolute carbon emissions are high, and maybe they go down because they use clean energy like Irish energy. But the emissions relative to the market value and the returns are not so high. And that is because when you compare Bitcoin and its market value and the returns with oil companies, for example, then Bitcoin doesn't look so bad. I can argue that we need oil companies, we don't need Bitcoin, right? But that's something that you can decide. But it's just, it gives this different perspective, right? Good, and then something you've heard that, and this is also how I got into Bitcoin, because I've done a lot of research on gold. And then you know that Bitcoin is claimed to be the new gold, the digital gold, the new gold, whatever. And so here we go a bit deeper and have a look at this claim also from, with the focus on mining. So how does gold mining look like? This is an example. And how does Bitcoin mining look like? Right. And it's a long paper, and we identify 20 different characteristics that allow us to compare the two things. But the main finding is that Bitcoin mining is much simpler, less complex, less risky. And so digital gold is a simpler version of physical gold, right? I really, simplify this here because of time constraints. This is a big paper, and we really dig deep, literally, to understand the differences. And it also highlights this one, that when you say that Bitcoin is bad for the environment or for the climate, Bitcoin mining, there's this other thing that gold is also bad. Right? But just because we've done this forever, no one talks about that, so it seems that we focus on the last thing that was invented, and then that's the bad thing. Good. And so, a couple of statements, because I think this is also what a university should do and what we are doing, to look at claims and statements and to assess them, analyze them. Again, very simplified, right? There's so much more work behind this, and so many more discussions and analysis. So Bitcoin is bad for the climate, I talked about this. Cryptocurrencies are very risky and must be prohibited. I heard this from ASIC in Sydney a couple of years ago, right? Bad, prohibited. Right? Blockchain can reduce child labor. I heard this 100 times at least. Blockchain can make gold mining more sustainable, or anything else, whatever you can think of. Blockchain is the solution. We've all heard that before, right? And I think blockchain is the solution to many things, but not to everything. Cryptocurrency can democratize finance, and lastly, FTX bankruptcy clearly shows, that's the Sam Bankman-Fried thing, clearly shows that cryptocurrency is bad, right? So the analysis, but again, simplified, Bitcoin, I talked about that, prohibit any kind of risky investment. So ASIC, when they said we should regulate or prohibit cryptocurrencies, they implicitly said there's nothing else risky out there, right? No one can lose money by investing in stocks. That's the implicit message, which is wrong, of course. Then here, blockchain can reduce child labor. That's the Oracle problem. So if you just say, like, look, we put all the information that there was no child working in the mine on the blockchain, then of course you have to trust that person or that group of people that put it on the blockchain, which is not what the blockchain is about, right? I mean, I think Bitcoin and the financial stuff that blockchain and does is because you generate stuff on the blockchain natively, and then you don't have the Oracle problem. The last one here, FTX bankruptcy clearly shows that cryptocurrency is bad. Clearly not, right? Because that's classical FTX bankruptcies, classical stuff that we've seen over the last 100 years several times. It has nothing to do with crypto. But again, this is all mixed up. So the truth, this circle, right? And what is often presented is only half the truth, right? But this is true for some people who really like Bitcoin or blockchain, but also clearly for the other group that say it's bad, right? They also like to just present half the truth, right? Explicitly or implicitly. So an example is the What Bitcoin Did podcast. Quite interesting, even though sometimes really long, because the guy who started it talks about his football club for half an hour before he gets into the stuff, but it's still fine. So imagine your bank calls you and asks you about your income and specific transfers you recently received. So they talk about this event on that podcast. Does that make you happy? Well, most of you would probably answer no, right? Because you don't want your bank to call you. I can specifically relate to this because I was also called recently by my bank, and they asked me why I received money from Singapore, right? And I can tell you that because nothing illegal, it's all fine, but I was also a little bit annoyed, right? So here, of course the conclusion is, right, Bitcoin, right, they don't call you, perfect, right? But here, the part of what is missing here again, typically for that, is that you can call your bank, because sometimes you also have an issue, right? You can call them and say, like, if I didn't make this transfer, can you please block my card or whatever? And you cannot call Bitcoin, we all know that, right? But it's important to have that, that's the truth, the full story. Good. And now I come to this project that I have updated. The Decentralized Research Publishing Corporation. So the aim is here improving research publication through greater decentralization and transparency. We're really using this Web3 idea here to hopefully disrupt that market. And it's a big market, very, very, very big market. So the current academic publishing publication process is centralized and lacks transparency, leading to the following issues. Authors, they do not receive any share of the large profits. It's a $1 billion industry. When we publish a paper, we don't get anything. And our university, UWA or any other university, they even have to pay to have access to the article, right? Imagine you create some art, whatever you do, you paint something or you do a sculpture, you give it to the gallery, right? Your name is on it, but whatever money the gallery makes with it, you will never see a penny. This is essentially our model. And our model is even more extreme, because when you give it to the gallery, you give money to the gallery. It's a little bit crazy, right? So we think this is really a great opportunity to disrupt this. So the peer review process is also centralized, not decentralized, so it's not openly sourced. That's another problem, and clearly, as I said, universities have to pay for it, and ultimately taxpayers may also have to pay a little bit for it. Right, and you see here how that has even increased over the years, the cost of it. And here, interestingly, the profit margins of these last two companies are the highest in this list, right? Google, we know that Apple is a very, very profitable company, but those academic publishing platforms, they make even more money, right? Which is then a great opportunity to disrupt. There's a nice video, but we don't have time for that. And so what we want to do is decentralize the whole thing, make it transparent, zero cost access, and do what is Web3 like, right? The profits, whatever they make, is shared among authors, reviewers, and editors. Currently, it's not shared. Currently, the publishing companies keep all that. And we just, because academics are nice people, and it has been like this forever, so we just do it. What else can we do? We can maybe potentially disrupt this. Now, the problem, potentially, and this is really, again, Web3 and something we can maybe discuss, is that we have this, today, the 5 billion profit annually in today's world, and the future could, if we are able to disrupt this, it goes to 1 billion, right? Because we get a little bit of this from them. But if part of that disruption also means, because we don't want to charge the academics, right? We don't want to make them pay and adopt that model. So then, of course, some of that money is what I have here in inverted commas destroyed, right? It's not really destroyed because it helps the universities and academics that we don't have to pay for it, but it's kind of not there anymore, right? And we can also, here, this is how it's distributed, right? So the current, the companies or the industry, they keep a little bit potentially if we do not fully disrupt them, right? So I do want to make this very bold assumption that we fully disrupt them to zero. But there's some that is kind of left in that kind of lost here, right? The red thing, right? Lost, or I mean, this is the stuff that we don't have to pay anymore. But if we are looking now for investors, there's also this part where we cannot say, look, you can make those 2 billion because the 2 billions they're not raised, like no one has to pay for them. So then that's something that investors cannot get back as a return. All right, and that's it. Yeah. Yeah. Question.
Question on that slide. Are these government-backed companies or private companies?
Private.
Publishing ones.
Private.
No.
Listed. Elsevier is listed company, right? Most of them are listed companies. Right?
So they've just got.
If they were government owned, then I couldn't make this. Then I could say, look, we get it back then somehow, right? Because then they can build roads with it or whatever you need, right? But
So they've
that's
just managed to monopolise the market. Is that what's happened? They've become a creditable source, and that's.
well, they're monopolized the market to some degree. I mean, I think it's an oligopoly. We have 4 or 5 of these Springer. They're like 3, 4, 5 big ones, right? But they are very powerful, right? And it's a as you can see and guess, it's a great business model, right? Here and then in the back.
Is there a project website?
Yes, we have one.
Yeah.
Yeah, and we can share that. Maybe you can share it with people. Yeah, and also the slide deck. Yeah. Yeah.
Also, just to follow up, if I can, what would you say is the most democratic blockchain?
The most democratic.
Yeah.
Well, I mean, there may be other more democratic ones, but I think Bitcoin, because that's for me my role model, right, or the benchmark, because it's out there. It was the first one. It's pretty stable, resilient, right, and it's really open, right. So I mean, there may be others, but I mean, also in terms of size, it's the most small. Right?
Have you heard of Tezos?
Oh, Tether.
Tezos.
Oh, Leo.
Is that his user question? Okay, I'll come back to that. Huh? And you?
So, suppose for example, if you reach sharing profit with creator without using blockchain, is it possible that publishing company also do that without using blockchain? Share the profit.
Yeah, I mean, this is more like a Web3 thing and not so much blockchain. I don't think we need a blockchain for that, right? I mean, we thought about a token, and we have built a model, like outlined a token economy. And for that we need blockchain, essentially, right?
Yeah, I think it's interesting in the way that NFTs are kind of like disrupting the creator economy for all forms of media, whether it's like music, video. I see research publishing as just another form of media.
I'm interested to hear about, for example, I'm aware that there are like committees with all of these major scholarly publishing publishers, is that correct? That kind of vet all of the papers and articles that are sent to them. So how would you do that differently in this type of decentralized model?
Yeah, okay, good point.
I mean, that's something I was researching about 5 years ago for a friend who wanted to set up a microeconomy, and he actually started, it was called Knowledge Arc, with a UK firm. So he was a developer with someone who had awareness of the scholarly publishing industry.
Yeah. So these publishing companies, you may think that they have editors that do all the work, and because they have these people that look at the papers and screen them, that then they deserve a lot of money, and that's why they make money. But the truth is that academics are editors and reviewers. So the publishing companies, they essentially use us, and they pay these academics when they're editors, they give them some money, but clearly not all that money that is here, right? But they don't use their own people, most of them, I mean some of them do, but most of what we're talking about here is a system that is based on academics, where they work as editors, looking at papers, reviewers, judging papers, and also authors, creators.
So is this like an open journal system?
Yes, it will be an open journal here.
Okay. Is that?
Yeah, so my
We have
question
the
is,
mic, right?
yeah.
Yeah.
I'll put it, my question is more on the academic level, not on this level here, right? So I've been involved in the space since 2015, 2016. And I see at the moment the primary driver for people getting involved in the space is financial benefit for themselves, not so much the broader technology. What I'm wondering now, having been in it for a while and having a company that built tech for the space, how do we unring that bell? How do we unwind the intertwining of financial gain and the technology itself? Because what we're getting right now is participants in the space that are virtue signaling the participants, and they love the technology and all that, but they're only doing it for their own financial benefit. They're not actually using the technology for what it's made for, in the hopes that them virtue signaling will bring in other people into the space and they'll be able to make more money. And that's where I'm seeing a conflict of interest right now between the technology itself, which I think is amazing, and in the overall user base right now for it.
I think if I understand you correctly, this is what I wanted to somehow highlight here, right? That the problem here is, like, I can tell investors
that you don't get all those 5 billion, right? But you are an impact investor, right? You help universities, you help academics, and that.
I'm not even talking about this. I mean, from a research perspective.
No, but also in general, right?
Yeah. From a research perspective, from you guys, right? Like, how do we? The reason that, like, for example, Web 2 took off is because companies were able to augment their business structure with online stores. They didn't close physical stores. They added online stores as another revenue rate, like another revenue stream. At the moment, with Web 2, with Web 3 businesses or even blockchain stuff, there's almost no users, like actual physical users in the space. They're people pretending to be masquerading as users in the hopes that if they virtue signal loud enough, that actual users will join. And that hasn't happened yet. And that's the reason we haven't hit the exit velocity at the moment. It's just we're virtue signaling to get more investors into the space, but we've failed to attract actual users.
Yeah.
So from
I mean,
an academic standpoint.
No, it's a good point. But I mean, it's the same when they talk about Facebook. If we can get Facebook into Web3 or Uber into Web3, why is that not happening? It's a good question. I don't know, right? I mean, why is no one doing an Uber where you, when you use an Uber, you get a return? I mean, you see that some of that money goes back to you, right? Or it's then cheaper, right? Why don't we have that? Why don't we have, like, I mean, it's kind of network effects, right? Once Facebook is so big and once everyone has Uber, then it's hard to get into this, maybe. But I mean, that's the usual question that I also like ask myself. I mean, why is that not happening? Why is the whole space not progressing fast? I mean, in the finance world, it's pretty clear, right? I mean, well, pretty clear. It's a strong statement. But they are clearly the big, the incumbents, the banks. They have incentives to slow the progress, right?
Yeah.
You know, if you think of if we all had a global stable coin, you know. We would use the stablecoin to transfer money from whatever, from your wallet to your brother, sister, mother, whatever, friend, anywhere in the world, right? So then no bank would make money anymore, right? So of course, it's pretty clear then that they do everything to push this back or slow it down, right? Same with, I mean, the mortgage market seems to be something that I think could also be disrupted, right? But so there's pushback. With Uber, Facebook, I'm not sure, is it then the network effects, like once these things are so big that no one starts it? Because that's really a question that you can, I mean, if you're building these technologies, right?
Hey, can I interject with maybe something that can advance this conversation? And can I just move your slides to this one? More back. Okay, so I was super interested in the fifth bullet, statement, cryptocurrency can democratize finance. I think it's sort of adjacent to what you were saying. That's the dream of Web3, right? You're emancipating yourself from this like centralized, extractive, exploitative model of the traditional finance system into a more democratic model where there's like shared value between the users, the creators, who are also, I guess, the shareholders or beneficiaries. So that was the wish, and what it seems to suggest here is that there's limited evidence that crypto can democratize finance, and I feel like this is adjacent to your question, why are we not seeing like a use case like Uber? Because Uber was the original use case, right? That's what they all talked about in 2014, how if you had the users and the like riders and the drivers were actually the owners, then that would be a really useful kind of DAO. Why is that phenomenon only have limited evidence? And then Phil.
Well, I don't see, I mean, this is not the potential, right? It could happen, but so far, I mean, but so far there's limited evidence, right? I mean, when you look, for example, at the crypto holdings, you know, as some kind of proxy for, is it democratizing finance or the world? Like the richer people, more educated people hold it, the poorest don't really hold it. I mean, there's claims that somewhere in Africa they all hold like some stablecoin, yeah, maybe, but in general, it is the richer people that hold and invest in these things, and the poor people don't. Like,
how does that? How does that marry up with use cases in certain developing countries where the unbanked are able to access financial systems using like wallets, for example, like in the Philippines, they pay in Bitcoin.
Yeah, but I mean, we have the M-Pesa, I think, I mean, that's not cryptocurrency, right? I mean, there's a lot of other things where, I mean, sending money on your mobile phone, I mean, that has maybe helped, right? Or a lot, it seems. But that's not cryptocurrency, right? It's a different kind of finance.
Phil?
I was just building on that conversation about the lack of evidence, I suppose, is ultimately about the technology at the moment is preventing adoption because there's a barrier for cryptocurrency technology for the average person. So what is it about the existing incumbents that make them attractive, and could you build your product to still look like that you don't need to know how to use a Web3 wallet to be able to use this platform?
Yeah, sure.
You know, and so how would you drive people away from the incumbents to this platform? Obviously there's the better sharing model, but you've got to be able to do that without needing how to know how to use it as well.
I mean, I can give this example that I with the horse racing. So that there's this, like someone told me about horse racing, blockchain horse races. I forgot the name, right? So I was excited, like, okay.
Zedrun.
Yeah, and so I remember that it took me an hour to buy that horse. Then I couldn't get the horse out of the stable and so on. Again, it was just clumsy. No, it was like I thought, okay, I'm too old for this shit. It's my fault, right? But then I gave it to someone younger. They also struggled. So it's just, I think if these things were easier, you know, they were. I mean, that was a really bad experience. And I thought, okay, no wonder that it doesn't take off because this is just bad, right? So clearly there's, and then you can talk more about this, right?
Yeah, just 2 points. So like, if you go to the website that Dirk mentioned, the way it's actually built is on like a centralized database where you upload an academic paper and people can like provide review comments and people can like vote on those review comments. And so I think that's a really interesting way of prototyping blockchain applications where you just build it in a centralized way and you go, hey, if we get like some real market traction here, like we can then vest the value that creates in the people that are participating in the network. And so back to the Uber point, I think the reason why, like, you know, the classic Web3, like why isn't the Uber network owned by its drivers? I think it's just the transaction cost of value transfers. Like, if you are trying to do that without a blockchain, you need legal agreements and you need a way of transferring that efficiently. I think it's only really recently that we've had blockchain technology that enables that to be possible.
I think the point that you were making though was that you could build that kind of community and profit sharing model with a Web2 platform. Okay, you don't need a blockchain to do that. Okay, but the fact that you can do that, and no one has been able to do that yet. No one's been able to disrupt those incumbents yet. Okay, what is it that gives them that stranglehold? Because that's the thing you've got to crack.
Capitalism.
Reputation, like one quick answer is also reputation. I mean, a lot of people would say, look, I need to publish in these prestige journals, right? I cannot just use your platform. I could use I would like to use that once all the other guys are on that platform, but I cannot be the first one. And so on. So that's the usual problem. Right. Question?
Just regarding the topic of use cases, if you look at Hedera, there's a lot of entities that are already building infrastructure on that. You've got the governing council members who, I think there's about 30 members with the likes of Google, IBM, you've got Aberdeen, DLA, Piper. Like these companies are all use cases and building infrastructure to whether it be DLA, Piper, tokenizing assets. Like there's a lot of use cases. You've got Drop, who have been listed as one of the merchants for FedNow. So there's a lot of use cases out there for this technology, and a lot of
use cases. Sorry, because I looked at so many use cases. The question then is always if it's a use case that makes sense, why doesn't that take off? Really, because it was so many. You remember use cases. Mercedes-Benz issues a bond on the blockchain, right? That was in news, global news, right? Then I look into it and it's no, we didn't really do it. We just tried it, we did the traditional thing and did that. We mimicked it, And that's the stuff that I often got a response. Yeah, okay, we said that we did it, but we tried it, but not really, And then if it's so cool, why didn't they do it, right? Or but then again, in finance, it's possible that the banks push back. It's look, we lose a lot of revenue here, so it's fine that you tried that. It may work, but let's keep the system as it is, right? With Uber or Facebook, is it then just the size? I'm not sure, right? Because not everything has big, powerful banks that also have access to the government anyway, and so on, right? And I wouldn't surprise me if we couldn't start an airline on the blockchain, right? Because it's just you need a lot of capital. But there's a lot of examples where you don't need a lot of capital and it could work, but then are the people not ready for it, or is the technology not ready for it, or is it really just because the incumbents are so big into the network that you don't want to leave Facebook and try the new one, right? Or Uber.
You've got banks who are already integrating into it, and it's because you can do micropayments, and it's cheaper and more cost effective to do it on the blockchain rather than the system that they currently have, and it's more efficient as well. So,
but we're an ecosystem of pilots. No one's actually scaled beyond the pilot, and I say that as a project building, but and admitting we are still a pilot. So I think until somebody's actually taken that next step and proven that they can go beyond that, and there are a few obviously edge cases. Bitcoin is obviously less of a pilot these days.
But my recommendation to that, I would say, is what we talked about at the last meetup, which was our philosophy around we just need to give our failures enough time. Enough of a time scale to become successes. So, it's pretty nascent, right? It's
but UX is the problem.
Years.
Okay, the user experience is the barrier.
Yeah,
on board. We will always be an ecosystem of pilots until we crack that.
Yeah, problem to be solved.
Which is also going to be a challenge for every project.
Solve that problem, you big deal.
I could probably speak to that quickly. There was a project early on called B Token, and they were trying to build an Airbnb competitor. And they had a great product. There wasn't a problem with the user experience, but at the end of the day, your competition is Airbnb, right? And we have other guys coming into the market Presearch, and they're trying to compete against Google. Or you have Brave trying to compete against Chrome or Safari that comes native on your desktop, right? So I think if crypto native products are going to dominate, there's going to have to be in a new vertical that doesn't have those incumbent players that have those economies of scale that you're competing against. Needs to be something new that they can leverage strengths on, become dominant, and then proceed to scale out in that area. So I think it's not necessarily criticism if no one's being able to make an Airbnb or an Uber competitor. It's just that they're so dominant, the players already.
I have a question for you, Dirk. So we're here with academics and industry. In terms of the blockchain and crypto research center, what are some of the projects that you're doing with industry, or in what ways do you think there could be better sort of tessellation between different actors?
Yeah, we have this one of the big projects that we have, right? We talked about smaller ones, but had them that we think of the stablecoin research that one of our PhD students does. We talked here about creating our own stablecoin, right? But because so that's really early stage. I mean, this is the most developed here, right? But I mean, I'm here. I'm very happy to be here with my colleagues. That maybe this event and creates new opportunities for us, right? Where we can assist or help or do stuff where you don't have time for, and we can then also use that to do more research and have actual use cases, right? Because that's always the stuff that I'm struggling with. We had recently a public lecture from one of those big four audit companies, and they talked about a lot of use cases, but all the use cases were again pilots, right? But the whole thing was not from our center, but from someone else, advertised as, here we show you the power of blockchain, right? And it was, the potential was somewhere there, but it's not that this has been invented last year, right? So there's still a lot of pushback apparently on things that don't work, right? And I think Empower is something where I think that seems to work, right? Or there's an example, at least that there's something happening, right? It wasn't just theoretically we can build a house, right? But you actually build houses, right? And you actually gave out money, right? So a lot of these projects are just like, theoretically it works, right? We tried it, we played a game or something, right? We are very positive, right? We like the technology, right? And particularly in finance, DeFi, there's a lot of opportunities. It's very exciting, right? But clearly, we are intrinsically, we must be critical as academics, right? So if this is too negative for you, it's misleading, right? We have to be critical, but we really embrace the technology and we like it, and it's a very dynamic space, clearly.
Lawrence.
Given that most of academic publishing is non-profit, have you thought about doing a beachhead activity in, say, academic patent filing? Because that is something which does have commercial benefit, and it's actually one of these imperfect markets at the moment. So you basically use funding more with screening and reviewing of these patents, and use that to cross-subsidize all the non-profit activities.
Yeah. I mean, if we got the plan is to get some investors on board, right, and then we could use bait to make academics, also top academics, to publish on that platform, right, and then just to get this momentum, so that because once you have a critical mass on the platform, it could actually really disrupt the existing players, right, and that's what the plan is now, to get some money to give money to authors when they consider the platform and they publish on the platform. So very different to the existing model where they have to pay, right? And if that money is sufficient, critical, then they may consider it, and then it could actually kick off. And then this is, I think, Uber hasn't. I'm not sure if Uber, Uber and Didi. They've all done similar stuff to some degree, right? When Didi started here, or the other one, that you can now ride for half the price or for free. When you do two, and that's maybe the way to get into that existing market.
Is it kind of doing like what Spotify did music, as in
where
you're not very relying on the publishers, you can just go and is it effectively a similar concept?
Yeah, you're right. Yeah.
That's cool. That worked well.
That worked well, yeah.
Among the blockchain statements or Web3 statements, it is very common and hard that it will solve the data security issue. So is it correct?
Say it again, sorry.
Web3 or blockchain will solve the data security issue.
Yeah.
So is it correct, and how much it is correct?
Yeah, it's not. I think it's not the biggest problem here, because academic research is very open. We would always upload our stuff somewhere anyway, right? And you may know or not know that academics are the most transparent in the world. When you Google an academic, you can find, in some cases, how many kids they have and where they live, and the whole CV is often publicly available. That's not the case for most other people, right? So it's not, I think, the biggest concern here. Yeah. Which is a shame, because if it was, then it would be an extra property that we could use as a selling point. Right?
I am asking out of academic, normal blockchain or Web3 application.
Yeah, when you look at Bitcoin, how safe that is, right? Because there's clearly the incentive system, the mechanism, they all work perfectly to make sure that this it's stable and resilient, right? We cannot say that of all banks or other payment systems, right? So it's clearly proof, I think, that it works well.
I think the security comes from not necessarily the blockchain as such, but the cryptography that sits over the top of the blockchain. So,
which is really part of the
yes,
make of
blockchain. I mean, you can have a blockchain that doesn't use cryptography. It's just a linked list essentially.
Any other questions? Yes.
We don't forget the other colleagues, right?
Oh, yes, sorry. Did I make
just
mistake? Oh, yes. Go. Hang on. Wait. Let's just do that first and then.
On the slide about what you guys are doing, you've got PhD students focusing on stable coins, patterns and narratives. What are narratives?
Well, the narrative is related to that Bitcoin has a narrative, right? It is, there's different versions of that, but it's decentralization, democratization, inclusion, right? There are narratives for all kinds of things. So this is, but we look at this how narratives also influence the success of something, right? Doge also has a narrative, right? For example. So, you have a question for Daniel, right? I think. Yeah.
Wait, am I going or
You're up.
You got that?
You're up.
Yeah, I think so,
Alright.
right? This thing's,
I'm
this thing is on the bottom.
That's all right. There's not that many people here.
Yeah, no, that's all right. I have to speak in front of people every day, so that's okay. So sorry, what did you just about my research? Yeah, it's kind of awkward. I feel like I'm standing in front of people that know a lot more about.
Is it on?
No, it keeps switching off. This light, does that one work better? Yeah.
Testing 1.
Yeah. All right. Here we go. All right, that sounds better. Yeah, I feel a bit awkward standing in front of so many people that probably know a lot more about blockchains and cryptocurrencies and stuff than I do. I'm a little bit like a dog chasing a bone when I see something kind of interesting. I go research it. And I suppose what I focus on is kind of like the market's reaction to all this kind of new stuff. And what I kind of find is that particularly in early stages, there seems to be an oversimplification of how this technology kind of works. I was actually, recalling this story about, I was in a lift with a colleague and a security guard walks in, it's back in 2017, and we were talking about Bitcoin, and the security guard says, the value's not in Bitcoin, it's in the blockchain. And I'm like, yeah, cool. This is back in 2017, and I understood why he was saying that. I read about Bitcoin and blockchains and that back then. But I was curious, if I asked him, why is the value in blockchain and not Bitcoin? I'm assuming that he would have kind of regurgitated this, blockchains are decentralized, they're immutable, they're fantastic for so many reasons. And then, if I continued and said, well, okay, how does it do that? I'm guessing it would have stopped there. He probably would have thought I was a jerk. So I didn't ask those questions, but it did kind of motivate me to kind of look at, how do people look at this kind of technology kind of at its face value. So the way that I see it is that, you've got people like me, I'm in finance, and, I see new technology and I see it kind of impacting finance, and I think, this is worthwhile me knowing something about. And then you have another group of people who actually do this stuff on a day-to-day basis, computer science and whatnot. And I found it was a real struggle town for me to find a book that would explain to me what Bitcoin and blockchain actually did. I bought 4 or 5 books and they all said the same thing. They're like, blockchain's fantastic. And I was just like, I don't care, just tell me how it works. Until I found one, some guys out of Princeton from computer science that actually went through and said, this is how it achieves decentralization, so on and so forth. And I was like, yeah, this is a really cool idea. But it was really hard to find that. And so the first paper that Dirk showed you was about like, you know, how the markets react to companies just showing some sort of interest in blockchain. It was motivated by back in the .com period, back in 2000. You know, you had companies and they would put like .com in their name and the market valuation would go up. And it's like, there's no reason why a company should be valued more just because it changed its name. And then, you know, in 2017, you had Long Blockchain Corp, previously known as Long Island Iced Tea. Very confusing, right? It's Long Island Iced Tea, a company named after a popular alcoholic beverage that sold non-alcoholic beverages that now is going to do blockchain stuff. I don't know why anyone would buy it, but its share value went up 300%. And yeah, that's crazy enough. And then it got delisted and NASDAQ kicked them off because of, I don't know, misleading investors. So not so great. And then, you know, I kind of pick up, you know, little things in the market that kind of capture my interest. And another project that I worked on with a colleague was simply how a cryptocurrency names itself. I know it's kind of stupid, right? But, you know, I thought it was interesting enough. And it was looking at cryptocurrencies. You had a lot of ICOs in 2016, 17, 18, 19, so on. And you just had this boom in the number of cryptocurrencies that existed. And it was quite interesting. Like, I would look at these cryptocurrencies white papers and, you know, be like, okay, this is what they do. And I'd be like, I don't understand this. There's all this like terminology and stuff like that. It's just like, I don't get it. I mean, I've read a freaking book on, you know, how Bitcoin works, and they're using all this terminology and there's all these equations and stuff. And I'm just like, yeah, right, that looks impressive, but I don't know what it is. And so I kind of wondered, like, how does like anybody else decide to invest in a cryptocurrency? And so I figured that, like, well, if information's difficult to come by and difficult to understand and this thing's brand new, then maybe they just look at the name of the thing. Yeah, it sounds pretty silly. But what we did is that we actually looked at, like, well, okay, if you've got a cryptocurrency and its name is similar to Bitcoin's name, what's your performance like? And it turns out that there's actually quite a big difference between if you've got a name that's like Bitcoin's versus if you don't have a name that's like Bitcoin's. And so we looked at the first few days where it began trading. So the first days that we saw it begin, where it began trading. So like, you know, one day to kind of like 30 days after. And so in that first kind of week, those cryptocurrencies that had a name similar to Bitcoin's did really well compared to those cryptocurrencies that had a name that wasn't so similar to Bitcoin. And I was just like, that's weird. Because shouldn't people be looking at these cryptocurrencies and saying, oh, this is why this is a good one? Unless for some reason all the good ones just had a similar name to Bitcoin, which seems unlikely. But then the other interesting thing is that we kind of look at the survivability of these things. And what was interesting was that the ones that had a similar name to Bitcoin actually didn't survive as long. They kind of disappeared from our sample more. So I don't know if you want to call those ones scams or not, but it's certainly one kind of conclusion that we drew. We couldn't say whether or not they were scams, but maybe it was just a quick and easy way for, you know, entrepreneurs or people entering this space to be like, yeah, you know, I got this idea and I want interest in it. Let's call it Bitcoin 2 or something. I don't know. And then more recently, what I've been working on, it's back to this kind of ideas like, well, what does Bitcoin have going for it in terms of fundamentals? Like, so when Bitcoin goes up by 10% or down by 10%, why did it do that? Well, I mean, you can go to demand and supply dynamics if you want. It's just like, okay, a bunch of people sold. Fine, but why did those people sell? Because if you look at the equity market, if BHP went down by 10%, you'd be like, something happened, right? And you could look in the news and there would be something that you could point to and be like, okay, BHP did something really bad or whatever. Maybe there was, you know, an increase in interest rates, and could be macro news, could be specific news. But the point is that we can point to a specific piece of information that would say, this is why BHP fell in value. But with Bitcoin, it's like, it went down 10% and went up by 10%. And so I kind of wanted to look at how do people use kind of technical language to describe Or how do people use technical language in social media around these kind of different returns for Bitcoin? So I'm working with two colleagues here, and so if we put Bitcoin returns into different buckets, say into deciles. So you've got your lowest returns in the first decile and your highest returns in the 10th decile. What does this kind of technical talk look like? Are people using more technical language when returns are low? Well, it turns out, yes. It turns out it's like a bit like a smiley face. So as returns are getting when they're very low, there's a lot of technical talk. So that, Bollinger Bands, relative strength indices, and all this kind of stuff that I barely know much about because there's a lot of it. But there seems to be a lot of this stuff. And I thought, well, what happens if we compare that to the equity market? What happens? And well, it turns out that in the equity market, if you've got very low returns, there's actually not very much technical talk at all. If you've got very high returns, again, there's not much, people aren't talking in a technical way very much. If you're in the kind of middle, so it's kind of -1 to +1% sort of thing, there's a lot of talk. And so with Bitcoin, we had kind of like a smiley face, and with equities, we had like a sad face. And you kind of wonder, it's just like, well, it kind of relates to this. I mean, I've heard the talk about bear markets. See, I'm pretty cynical. So you hear this, I talk about bear markets and whatnot, and it kind of confirms what I see, like in terms of what people are talking about in social media. When things are going badly, there seems to be a lot more reference to this kind of technical language. Now, I can't say for certain, but it's as if we're trying to justify why things are going so poorly. Because without any kind of fundamental information to point toward why things are going down, it's like, well, what else do you have? Yeah? You're going to tell me what we have?
Oh, no.
Okay.
Do you think Bitcoin might resemble more like commodities or the foreign exchange market where technical analysis kind of proliferates a bit more?
Yeah, well, it certainly seems that way. That's what, I mean, I guess I could compare it to, foreign exchange, possibly, but even with foreign exchange, we can understand why different currencies are going certain ways, right? There are a lot of macro factors and whatnot that we can point to. Yeah. Yep. So.
What about on-chain data?
On-chain data.
Yeah.
Oh,
Yeah.
what's on-chain data?
Every blockchain that has an explorer has on-chain data that
Okay.
shows their transaction
Yeah.
volume, that shows their payouts to miners.
Yeah.
How many coins are held on the exchanges versus how long it's what segments of coins have not moved for a certain amount of time?
Mm-hmm. So is that got to is in relation to?
Is that fundamental?
Is that fundamental? Oh, right. Well,
Is it the only fundamental?
No, I would say there are others.
so
I use four myself.
there's this was the other thing. So with this last paper in terms of like this technical talk, I'm not trying to explain it. We're not trying to explain technical talk predicting prices. It's going the other way, right? It's like when things are bad, there's more technical talk. So in terms of fundamentals that are driving returns, I mean, the literature, it was kind of like the first thing that academic literature turned to. It's just like, well, what drives this thing? And you had so many things that would, people would point to. People would look at equity variables, people would look at commodities, foreign exchange. There was, things like, hash rates, the network, variables and mining variables and so on and so forth that people would look at. There's factor models. So in traditional finance, we have things like, size factors, value factors, and so on and so forth, and people have gone and created a bunch of cryptocurrencies. In terms of what actually drives cryptocurrencies, I mean, I don't know. In this paper that we looked at, I've included a bunch of those network variables. So, I've got the daily hash rate, number of transaction, mempool size, so on and so forth, all of that stuff. Whichever way I dice it, it seems to be going one way. But because I'm not really trying to explain what returns in Bitcoin are going to be. I'm not trying to say that, people on Reddit, because that's what I've used, people on Reddit, just because they're talking more in a technical way, that they're able to predict where returns are going. That would be a tough sell. Even if I could show that, or we could show that, I don't think anyone would believe us. I wouldn't believe it. I would just, but if that's your question, if that's what drives returns, I can't say what drives Bitcoin returns. But people have certainly tried. But I'm kind of skeptical in some of the, I remember reading an early paper that looked at the consensus algorithm that different cryptocurrencies use. And that at the time seemed kind of weird to me. You look at the consensus algorithm, because, I don't know, it was almost like the value of a company was driven by what accounting software you use or something. I don't know. It just seemed odd why that would drive prices. I didn't think that at the time people were digging into a white paper and being like, oh yeah, this is what consensus algorithm you use and this is how it works. I mean, most of the people buying cryptocurrency probably didn't even know what the consensus algorithm was. I'm not.
That would relate to the bottom dot point, that centralisation versus centralisation. I think a lot of people investing at the moment, if they're coming for that narrative, talking about narratives, then the consensus algorithm contributes to that. So that can help narratives drive price up.
Oh, absolutely. Yeah. I think, with Bitcoin and whatnot, it's absolutely, because it doesn't really have, I would argue it doesn't really have anything else other than a narrative. Which is not a bad thing. I mean, you're fiat currency or whatnot. But
And based on what David said, that if gold, or if Bitcoin is gold-like, then it's potentially hard to explain it because no one understands gold prices. Right? I mean, even central bankers and no one has a clue where gold goes. And so if they're similar, then we have a similar problem with Bitcoin.
The issue,
and again, just theoretically, right? When you say you cannot predict that, it's also theoretically it's hard because the price of Apple is determined by the number of things they sell, right? Bitcoin is different. Commodities are, based on demand and supply, right? And then Bitcoin, you need oil and copper and stuff, but Bitcoin is a little bit different. Similar to gold, you don't really need it. Only a small part, and that makes it extra difficult.
Yeah, there's something that's always been quite curious to me when I look at, you hear people talk about the comparison between gold and Bitcoin, saying they're quite similar, and yeah, sure, you can draw similarities to them. The one thing that I found really difficult to kind of, bridge that gap was that people have been using gold as a medium of exchange for thousands of years. The ancient Egyptians didn't have Bitcoin. I'm just curious as to how much of a role that plays in it, right? I think it comes down to this whole trust thing. But when you've got something with thousands of years of history.
Sorry, do you want to switch it up?
I don't know. Last time that thing was. Does this one work? Okay.
For the next one.
I could just speak louder.
Yeah.
Off, on. Oh yeah, this has got no battery. So yeah, that was one thing that's always kind of I found kind of curious as to how do you kind of value gold from that sense? People using gold to buy and sell things, and then saying, okay, Bitcoin can replace that. I don't think it's as easy as saying that Bitcoin can replace that because it has all these similarities. But yeah, I guess that's the difficulty.
So when you're talking, the thing that comes to mind is how do you ascribe value to something that it sounds like it's quite opaque? The rationale for people ascribing value to Bitcoin at any given time, if you go all the way back to, currency, money being created as a proxy for value, whatever that means, there seemed to be a similar narrative to that kind of placement of trust in this entity that is essentially, a construct, right? So that this is a physical thing that makes noise, and that has some value. But then initially it becomes quite a subjective process for me to say, well, that is, I feel, my subjective value equivalent of a glass of wine, right? So, yeah, did your research go so far as to kind of look at those parallels? And I don't know if it did.
No, not really. I mean, the research that I've purely been focused on when it comes to things like, you know, cryptocurrency, blockchains and so on is purely how the market kind of perceives it, and how the market behaves around these kind of overly hyped up periods. I mean, Dirk spoke about, you know, supply chains and whatnot when it comes to blockchain. And it seemed to be like this early use case of blockchain to be like, you know, it's fantastic. And, you know, at that point I had read this book, and I was just like, yeah, I get how it works. And I get why Bitcoins are immutable and why we can trust it and all this stuff. And it was just like, well, that's because Bitcoins are native to its blockchain, right? It's just like, that's where they came from. Nobody put it on there. So we would have people stand up in front and say like, oh, you know, blockchains are going to revolutionize supply chains. Because like, you know, if you want to buy an organic piece of fruit or something like that, it's just like, well, this organic piece of fruit's on the blockchain, therefore it's organic, right? Well, no, I mean, this organic orange didn't manifest on the blockchain like Bitcoin does. Someone kind of, you know, I don't know, put a sticker on it, scanned it, and then put it on the blockchain. And it was this kind of like misunderstanding that, you know, is the sort of thing that I've been focusing on. This kind of, people get really excited about a technology, simplify it down so that they can understand it, and then run away with all these ideas that, you know, this is everything that it's going to solve. And it's that kind of behavior that I find very interesting, which is why I say, you know, it's kind of, maybe in a way embarrassing for me to stand up here, because I mean, I'm sure like most of you know a lot more about, you know, the functionality of blockchains and cryptocurrencies, whereas I study a lot more about the behavior that people have when they, you know, see a new technology, which is why it's interesting. Like, you know, I suspect you're seeing the same thing with, like, you know, large language models and whatnot, like companies coming out saying, you know, I think it was some like journal kind of company. They were saying we're going to use ChatGPT to write like most of our articles, and you saw like the same like spike in its share price, and then like a couple of days later it's just back down again. It's just like investors just see this one thing and like, ah.
Okay, so James, maybe given that we are coming to the close of time, you can have the last question, then we can, yeah.
I thought I'd ask, how are you accounting for the impact that miners have on the overall price, right? Because there's an equilibrium between traders and miners with the fact that if the price gets too low, the miners go, not worth my time, I'm moving somewhere else, which stops the network from basically functioning, right? So there's kind of a floor price inbuilt into the overall algorithm, the way it works. So how are you?
Is that necessarily the case? Like, I mean,
yes,
well,
100%.
because the thing is that you got a big miner, they've got all this hardware, and then they switch it off, and the hash
No, they
rates
switch
go
off,
down.
they switch something else that makes more money.
Okay, so they stop. But then doesn't it become easy enough?
No, it takes longer for the algorithm to readjust. So
It takes 2 weeks or something, right, for it to
yeah,
readjust?
so the network will basically grind to a halt, which means that you have a bunch of
For
people
like 2 weeks
with lots of money trying to sell it.
Yeah.
And then so it was designed this way for a purpose. So not one party has more power than the other. So it's an equilibrium between the miners and the users.
Yeah. So, I mean, in terms of like my research, I mean, you know, if we look at kind of like a model, like a regression, or what that I'm using for, you know, X to explain Y, I believe that would be accounted for by the mempool size. So when there's a lot of congestion on the chain, you know, that kind of spikes up. But you know, but I mean, you know, it's just kind of like, this is why I'm asking. Like,
yeah.
So like, so the price of let's say the price of Bitcoin goes down, people switch off their mining machines, or they go mine something else, and then there's a 2-week gap. essentially, or whatever gap before it adjusts and becomes easy enough to mine.
Correct.
But it's going to be profitable, or, well, at least reach an equilibrium at that new lower point.
It's basically the reason why when we start seeing a downturn in price, people can predict the floor pretty easily because they understand how much electricity it costs to actually mine a Bitcoin.
Yeah.
Right? Or to break even.
Yeah.
So miners will literally just switch off if they get to that point. But you also get this kind of lead up to it because you get the recreational hobbyists that obviously pay more for electricity that will start switching up earlier, and then you get the overall factory size miners that are paying cents for electricity versus 20 cents for electricity that will start switching up for lower prices.
Yeah, I mean I have seen papers control for electricity prices and whatnot. I don't know if it's too kind of averaged out, it'd be like the average electricity price in the US or something like that. And yeah, I couldn't really say. In terms of my research when it comes to looking at social media and how they talk about it and whatnot, electricity prices are not something that I've looked at. I mean, it could quite easily get something on.
Just based on that point, I think Bitcoin is running at, I think it's over 60% off of renewable energy.
Really?
Yeah.
Nice.
So the cost of actually producing the Bitcoins is actually more efficient than other chains.
Is this why Ethereum's run into all these problems?
Well, another factor is you've got companies like Bitmain, right? So when Bitmain sells a miner, they also burn it in, and so they basically run it for free for about a month before they send it off to a client. So and they account for that in their energy costs. So it's basically free for them. That's why Bitmain represents such a large section of the mining pool.
Oh, okay.
So
they burn in there.
They testing this for a period of time, which I'm at the moment from my calculations.
So while they're testing it, they're mining Bitcoin?
Oh, 1000%, yeah.
Oh, cool.
Yeah, so they're not just selling the unit, they're also running it to test it at that person's expense.
Alright.
Can't ship a fault, right?
Well, no, that's fair enough. Yeah.
Thank you so much, Daniel and Dirk. I think one of the real utilities of having a peer-to-peer education community is that we're able to learn from each other, and what we often get is in these industries you have silos of actors that have lots of conversations with each other, and there's a shared context within that environment, but rarely do they kind of breach each other's pores and kind of cross-pollinate their worldviews and their mental models. And so I think what's really useful here is we're able to hear from the research in academia, which I think is going to be ultimately really useful from an industry perspective, because then you're able to understand long-term trends from a research and evidence-based perspective that informs the work that you're doing and might also enable you as builders to consider some of this phenomena that is being surfaced with a broad range of research and how you're approaching the way that you build your Web3 products. And I just really want to thank the UWA Blockchain and Cryptocurrency Research Centre. Do you guys have any meetups or community events that you think would be useful for this group to know about?
Yeah, we have this that gown meets town thing, or whatever we call this, similar to this essentially, but so that we did that at UWA last year, and we'll have that again, and you can find that on the website when we do it. And we also have these public seminars, online seminars, where Iris Energy, for example, will present next week, I think, or the week after. So this is a regular monthly thing that you can just sign up to, and then also just listen and maybe learn something.
Awesome. Thank you. And for those of you that want to continue the conversation, we've got drinks, we've got this space until about 9 o'clock, so please continue drinking and eating the pizza if we've got anything left. I will invite you all to sign up to the event that we've got with Magnet Capital on the 12th of October. That's in 2 weeks' time. That's the QR code there. So Egor, the co-founder, is coming to town, and we'll be learning the lessons from a crypto asset manager, understanding their macro trends, that are informing their portfolio, learning about their investment thesis, learning a bit about some of their portfolio companies and how they make decisions, and also learning from their failures and what they think they did wrong, and what they think they could do to, I guess, pick the winners. So that will be a really useful one to have.
Can we have a team photo tonight or a photo?
Yeah, sure, we can totally have a team photo. I guess, Sophie, if you want to come here and then we can do, well, go to the front.
I don't know if my lens is going to catch.
Sweet. Basically, the formalities have wrapped up, so I will encourage you guys to continue talking to each other, but please stay for this really important section.
I might have to go on the side to get a side angle. Oh, wow, that's pretty cool. Okay, do something really interesting. Yay! 1, 2, 3. Cool.
Thank you so much, Sophie. And guys, Sophie's a really valuable part of our community. You might have seen her at such places as the Aussie Crypto Conference last year, and she's involved in lots of different communities, and I know, Dave, that you're involved in the fintech community here. A few others are involved in Perth Crypto Crew and others, so it's a really lovely collab of different groups. I would encourage that, and hopefully many of you can continue to come to these on a monthly basis. But that's a wrap from us, so please continue to drink and eat, and hope you have a great Arvo. I'll see you in 2 weeks. Thank you.